Let's try this again. Are we live? Take 2 this morning. Are we live? I'm gonna wait until I see us live on YouTube before I proceed with anything. So give me a second. I'm waiting. I'm troubleshooting. Do I hear myself? Do I see myself? I do. I do. Okay. Whew. Sorry about that, everybody. Bond market's going crazy. Show's going crazy. Things are happening. Here's what I was saying when I was talking to myself, apparently. We've got Brian Shannon on the show today. We got to talk about the bond market because it's doing some really weird things. That's the general theme of the show. Bonds, Brian. Bonds, Brian. That's what we got. We got me. We got Steve. Let's roll my intro and let's get on with it, shall we? Okay.
You know, Spencer, maybe check with me before you decide what I plan to talk about on the show, because I couldn't be less interested in talking about this volatility in the bond market.
Really? Come on now.
Yeah. Apparently tariffs are inflationary again.
Yeah, right. Because they
We haven't decided yet, but we're going back and forth on it a little bit. We're back to their inflationary. Look, I'm surprised that bonds are crashing the last 2 days. I would think that people would be buying bonds in this environment.
Apparently nobody's buying bonds. That's the problem.
However, there are some big holders of these instruments, U.S. debt in general, right?
Yep.
Who might be selling right now. Did you see the action in the Chinese yuan, the renminbi?
No, but I want you to tell me. I'm actually curious about it, like genuinely.
They're weakening their currency out there. And whenever China's weakening or strengthening, frankly, but mostly weakening, when China's weakening their currency, it means look out. It's not like it's telling us, it's not like the action's telling us something we didn't already know, right? But that's like a global economic problems asset, the Chinese yuan. Yeah. And it's breaking down from a massive top, really a holding pattern that's been in since 2022, flushing lower. So that's just more panic price action, right? But I do think pay attention to the people who actually own these treasuries. Maybe that's driving some action in the bond market. It certainly maybe doesn't explain the extreme weakness in corporates as much as treasuries. You know, you look at something like our credit spreads ratio. We do the HYG-IEI. And it had its worst day since the pandemic. We talked about it last week, and there's been nothing good since. Hasn't even bounced, this ratio. And what's happening right beneath the surface, behind that ratio, is high yield bonds and treasury bonds. Treasuries, we could talk about how they're crashing. They've had 2 terrible days out here, but look at high yield. Look at high yield bonds. That's what's really going on in the bond market. That's the real problem. Is look at the information from credit spreads. You get moves like this in credit spreads, it's not safe out there. So that's just where we are. The fact that people aren't buying treasuries, interesting. The fact that maybe China's selling treasuries, that's actually interesting too. I wouldn't think that would be the move right now.
I mean, what other moves can they make on the board, right? They can do the tariffs, which they did, right? Reciprocal tariffs, which they announced. They can also just like not buy and or sell their U.S. debt. So that's what's happening here, I think, right?
Can we have one of our bond friends on? I'm good at asking questions about bonds. I'm not as good at answering them. So we should get Bianca on or Larry. That would be a great conversation to have in this environment.
I concur.
So Tuesday, some sort of fake headline, rumor. Rumor mill's crazy right now.
Dude.
Pay attention to the rumor mill.
Dude,
right?
Nuts.
All these false reports. They're getting false reports right from the White House, right? And then the reporters are going in and being like, I was just in so-and-so's office and this isn't true. Like that's what's happening in real time. So Tuesday, we got some, potential good news being rumored in the morning. Market went absolutely crazy, lost its mind, up like 4% in 10 minutes, right? We were on the live stream. It was happening. Then slowly throughout the day, those rumors are kind of dismissed as what they are, and we give it all back. That was Monday, actually. I'm sorry, that was Monday.
Today's Wednesday. Yeah, I too am losing track of days. It's okay.
That was Monday. What I just described, that's what happened Monday. I'm sorry. I've been in Miami, dude. Listen, I can't spend more than 3 days in Miami. I'm going to tell you what I did. Tuesday, come in Tuesday. So we're doing this thing again. Market's screaming higher in the morning, right? Why is it up? We don't really know. It's like a hope call. People buy in the morning. They buy like a big hope call that something will come out, some sort of deal will be made, some sort of positive headline will hit. And then what happened? Slow drip. You looked at the market at 10 o'clock yesterday. You're like, oh, great. Bottom's in. Looking good out here, right? Then all day, just slowly selling. And everything across the board, everything in the US, everything internationally, China, Europe, bonds, Bitcoin, all just slowly selling off throughout the day. So the negative is the bears are still in control. The sellers are still in control, right? They're dominating the tape. And we're closing on the lows pretty much day after day. Positive is that buyers are ready and willing and available. They're out there, right? They just need something. They need like some sort of inkling of good news. A rumor of a positive headline put us up by 4%.
Yesterday, the story of yesterday all morning was a victory lap, right? For all the buy the dippers and all the bulls. See what recession, what crash, everything is fine. And then by 3 o'clock, it was like, oh shit.
And Colin, I'm not assuming that. Not assuming that China's the one selling treasuries. Just saying they could.
We don't know. Yeah, we don't know.
A hope call sounds like a good strategy. You know, in this market, when you have a historic sell-off like this, hope calls aren't really a bad strategy at all. Calls are looking good out here. Whenever you hear them say tariffs, you call your broker and you buy more stocks. Okay, Jack.
That was. He did say that. he did say that. Anyway,
so hold on. One more point on this. Yeah. China's weird. Okay, they're not in the best shape financially. Things aren't perfect over there. They're big and they're important. They're massive on the global scale. They own a bunch of our shit. They own a bunch of our debt, and they sell a bunch of stuff back to us. Right. So we are very much in bed with them. Also, from a capital markets standpoint, all of this cyberbullying about delisting Chinese stocks. Do you know what that would do to U.S. capital markets and the big boys here in the U.S.? This has been one of those big concerted Wall Street efforts. Go look up the MSCI Roadmap to Inclusion. This has been a big deal for over a decade now. Everyone's involved. Everybody's making money. They're all in. They're not just going to go delisting Chinese stocks. I think that's absolutely crazy talk.
You would have to. We have a precedent. You would have to start a war to get delisted in the U.S. Right? That's what you have to do. You have to start a war.
And here's the problem with China. Speaking of war, why is China scary? Because they're nuts. They have a cultural pride complex. Okay, if we're being honest about it, President Xi will not look weak to his people, even if behind closed doors they are in a weak position. That's the one thing they will not do. They will start a war before they look weak. It's crazy town over there. That's the big risk right now. They are not in a good position from a bargaining standpoint. We have the far better hand, and they're coming out here announcing 85% tariffs. That's what's scary about this situation. They shouldn't be doing that. They don't have the hand to be doing that. We will crush them. We'll just team up with the rest of the world and crush them.
Assuming the rest of the world's on our side, you know, I don't know.
I don't know what it takes to make a proud nation, a fake proud nation like China, fold. I don't know what that looks like. So they're scary in that way that they're just crazy. I don't think they negotiate and do deals like people who are rationally sound-minded. So this can get really interesting from that perspective. They will not look weak to their people. You have to understand the narrative in China is we're stronger than the US. We're not afraid of them. So they're going to act that way, even if they're not. That's what scares me about all this. And that's really about it. I think there's a really good chance that we look back in a year, Trump's Time Man of the Year again, and he made some huge new world order trade deal, right? And everything's fine and everybody's happy. And China and the US are like friendlier than they have been in decades. I think we can easily get to a place like that. But China has to come to the table, and they're not right now. They're not coming to the public table, at least. Who knows?
There's a quote
on phone calls behind closed doors.
Yeah, there was a quote from the show Chernobyl, with a tremendous show on HBO.
Great show.
You are humiliating a country obsessed with not being humiliated. I think that's more or less what it is, right? And it's the same thing applies to China. The same thing applies, frankly, to America too, probably right now. So
to a lesser degree,
yeah. So
listen, here's the big difference between the U.S. and China. U.S. doesn't want to be embarrassed, but everything's out there. We're a very transparent nation, right? We talk shit about our politics here. We can say whatever we want. We have a free press. China, on the other hand, the story is a bit muddled to their people. Our people we know who America is. If you're paying attention, U.S. citizens, you know who America is, right? It's fine. In China, it's not that. They don't know who China is. These people have been lied to for a long time, and they're drinking the Kool-Aid. It's part of the culture.
Yeah. Totally different world over there. All right. We have Kenny Glick. We'll bring him on in a second here. What else? What was I going to say? Shit. It was about yesterday. God, I don't even remember. Things are moving so fast.
Spencer, we are one green shoot close away from a massive face ripper. Can you imagine the headlines? Can you imagine the price action? If this actually came to a deal, like soon, tomorrow, the next day?
Yeah, that's been the risk. That's the risk.
I mean, this thing can go at any second. You have no idea. You have to be just on the news. You got to have basically a news feed, shout out Trade Exchange, and just be watching every print. And then looking at the way that price reacts to it and not getting fooled, because there's going to be a lot of fake shit that's reported, just like we've seen already the last 2 days. Kool-Aid is American. Is a great point.
Look, and if your time horizon is long enough, right, maybe just ignore all this stuff altogether. I've got my shopping list. It is full. It is pretty full. Nothing has been purchased yet.
Yeah.
I have to do some interrogating of myself today, tomorrow, this week about what I don't really I haven't sat down and actually make a plan. That's the bottom line. The best plan is a plan, right?
Just the bottom,
right?
Yeah. You got to have like a rule now.
You got to have a rule. Yeah.
Like SPY 48, right? Nothing below there. Hold the prior cycle highs. Draw a line. We've talked about VWAPs. One VWAP after another VWAP after another VWAP that are getting shattered. One after the next.
Yeah.
Have some sort of line in the sand, right? Okay, we got to be above this level, because what can happen in this type of situation, I have some smart friends telling me market should be down 40, 50%. It's just basic math. If this thing doesn't get figured out soon, maybe it is down 40, 50%. So you really do have to protect yourself in this kind of environment.
I mean, the story of yesterday is that, aside from the fade, the afternoon fade, was that, say goodbye to 2024. 2024 didn't happen, right? Last year never happened in terms of the market, right?
And
so
no. Why is China up today? Because maybe that's it. Maybe that's enough, right? The market's smart. I know. I understand. China's positive today. Strazza, why I said Trade Exchange? Because they're the best in the business. The best in the business. That's why. Good friends with the folks over at Trade Exchange. I've known Milton for a long time, Wavy. You would love their service. Here's where I'm at on China. A lot of people are asking me, Steve, are you still bullish China? China's up 45% off the lows from last year when we started getting bullish on China. Okay, we're good in China. We can give back 25% at the index level. That's not a problem, because where we got in, where we entered. Of course, we have to watch the price action, make sure that the primary trend. And a lot of these reversal situations aren't breaking. Some are coming undone to an extent. Others are holding. The damage to China is nothing like the damage to the U.S. at all. I think China's okay. I think we have to monitor this very closely. If that was it for the downside, that wasn't much damage. We could repair it, no problem. Bull market rages on. I also think from a sentiment standpoint, this kind of news, this kind of trade war happening right here while China's completing a massive reversal after being a terrible place to be for a decade, is really, I think, makes the story and the potential upside even spicier. China's been trading like their situation isn't sustainable for my whole career, Spencer. Imagine if they make a deal with the US and these two countries are in better standing than they have been my whole career. Could that uncap some massive potential gains and really remove a ton of uncertainty? Is maybe the reason why China trades at this massive discount to stocks around the world when really they have great tech stocks. Maybe the reason China trades at such a massive discount is because they're an enemy of the United States.
I'm sure that's part of it.
And maybe, God forbid, they get to a place where they're not an enemy of the United States. Do you re-rate their stocks? Does a stock that trades at 12 times earn a 16 times multiple just because of that? Do you get what I'm saying?
Yeah, but that kind of changed. That happens over the course of years, man. Not quarters.
Maybe this has been coming to a head for a long time. I'm just saying there could be a structural re-rating to the Chinese equity market that could really put the China bull thesis through the roof.
Very interesting comment in the chat. From oh gosh, who said that? From JB. I want to get to that in a second, but I want to bring Kenny on first.
Get him on,
because I know he's been crushing it every day and probably watching the UVXY. Actually, I don't know. I didn't read his email today. I don't know what he's watching. Let's find out.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Captain Glick.
My man.
How we doing?
We just bought Apple, Qs, and short volatility right now. So fantastic stuff just happened. I don't know what's going on, but I'm not going to not be happy about it. What's up, y'all?
Apple no longer the most valuable company in the world. Number 2.
I wouldn't know.
Yeah, I found that out like this morning. But all right, long Apple, long the Qs, short vol. What? Just bouncing off the overnight low, right? Is that it?
Yeah, I've been up since 5:30, so this has been a lot going on. I was long right before that 7 o'clock destruction. I was buying Qs because they were feeling pretty lovely at 5 o'clock in the morning today. And you had let me show you some charts. Hang on a second.
Oh.
QQQ. Yeah. So yeah, I've been up. I've been getting up early. I was actually first thing I saw was the futures weren't down 1,000 points. So that got me out of bed. And, I got up around 5 o'clock in the morning. I don't know if you see my charts already, but you'd already had this double bottom right there. So I was up as they were rolling back over, and then they tested support, and then they broke over VWAP. So I got involved here, and 15. I'm usually a seller at 1750. So 1750, I'm out. Starts to rally without me. I'm like, oh, typical. Stocks are going to go up without me, and then suddenly this happened. So I got hammered over here when I bought back at 1413, and immediately I looked like I was going to be a hero, and I immediately just had to sell for a quick loss. And then we just had this little faux show bro action again right here. So we're long. I just sold at VWAP, and again, same numbers, 415 out of most of the 415, and basically getting out right here at 1350 right now. But Apple was the it seemed like Apple started moving first, and they're basically the same looking chart, same exact trade.
Yes.
See, it's basically the same chart. So you had your little capitulation. It came out of the Andy Dufresne going sideways. I bought right here, selling at VWAP, overshot it up there, and just got out at 170, 172.50. The same levels. 170 gets you 172.50. But just to reel it back for a second, yesterday's action was, Strazza. By the way, Strazza looking good. Nice tan. I mean, this guy.
Oh,
Let me get to that color.
You spent a couple days in Miami Beach.
I know, man. You're glowing, bro. It's sick. I need some color in my face. But
Yeah.
the Monday face ripping rally was it kind of came out of nowhere, and you had your faux show, bro. No one was expecting a 28-point move on the Qs in 40 minutes. You just never see that. Yesterday's action was actually the best action I have seen ever. It also proved to me that the market is rigged once and for all to price, and these prices are predetermined. So let me show you why. And again, I sent this in the email, hoping anybody got rubbed the wrong way in my opening statements in my email today. But let me just talk about it for a second. All right. So I trade price. And when I talk about price, I talk specific price. That's why I love VWAP, because all it does is address the most important price, the volume average price, right? So when you had that face ripping rally, let me show you on a 3 days on a 5-minute chart, you'll see it better. So this is absolutely incredible. All right. And it was kind of bewildering and frightening at the same time. So you had this monstrous rally, which, again, the likes of no one's ever seen. The market cap alone, a 10% move on an index in 40 minutes is absolutely insane.
Yeah.
But we hit a very specific price, 443.14, right? So boom. And then we sold off, and whatever the case may be, we had a nice rally at the end of the day.
All right. So I have a feeling that's going to come back into play. So hold that thought.
Right. So yesterday, I came in a little disappointed that I didn't hold any overnights. Not that I was planning on it, but, the market's showing some strength. I got involved. And again, I'm looking for a reason to play the fade because it was up so big, but it kept going higher. So I said, guys, let's see if this happens. We know 443.14 was some crazy print from Monday. Let's look for it to get to 443.14. So here you have 100 stocks underneath the hood of the QQQ. It's a mathematical impossibility to get to a very specific price because there's so many moving parts. But yet, and here was the comedy of it all, it got to 443.07, and it started to sell off. I was like, wait a second. We have to hit 443.14. The next candle gets to the 443.14 to the penny, and that's where I said, all right, if we start to roll over now we could use the 443.14 as our stop, because if it breaks that price, obviously we're on a new bull market. And then VWAP breaks and we started shorting it. And look where it went, to the orange line. That's prior day VWAP. And that's when you started feeling some love. And again, disappointing that I covered most there, but you're not going to be too disappointed from a stock that goes from 438 down to 427. This was a great trade, but look at the beauty of this all. Breaks the VWAP. That was yesterday's VWAP to the prior day. That's where it found some support. And I was like, you know what? Enough is enough. We had a great trade. Let's get the hell out of this thing. And, some guys held on, and I couldn't muster up the strength to get short again. We had traders in our room that were speculating that this might happen. We've got guys, and he was texting me, you want to be buying the 432s today? This market's rolling over. I'm like, yeah, well, let's wait to see if it rolls over. But some guys were buying options at the open. 432 guy, if you're out there, well done, my man. We bought him at $1.10, sold him at 21. And then we had some guys that were buying this. They were just speculating that we were just going to crash. They were buying the 420s for a dime, wound up selling them for like $3.
Man.
So you're getting 300%, 3,000% returns in this market if you just kind of know where to look. A little speculation, but the way I trade, it's more reactionary than speculation. I waited for the confirmation of the, running out of steam, and then my idea was confirmed by the VWAP. Plenty of meat in the middle there to get paid. And, again, some of us, some not me. I wish it was me. Some guys held right into the bitter end and just absolutely crushed it yesterday. So fast forward to where we are now, again, just a lot of action so far this morning. And luckily, I didn't get too damaged by that 7 a.m. rip down. But now we're back to that faux show bro moment. And the market's showing us some strength. The volatility products are coming in. And again, trading is fantastic. But the only thing bad about it is that 7 a.m. candle, we're susceptible to that now, because at any minute there's a news story that's going to drop and rip us up. Like Strazza was saying, we could have a 10% candle any second now. At the same time, something even, I don't know how much more they could be more damage any tweets can say now. But at any second, there could be something else that comes out, and then we have a rug pull again. So, again, that's why the way I trade, I'm always selling into the move and covering on the way down. I have my stops on, and, again, I'm always complaining that I don't make enough, but you make the meat in the middle and you just live for the day. So far, so good. It's been a pretty good morning.
You're saying it's not a coincidence that the QQQs went to the same price to the penny.
Not a coincidence.
Not a coincidence. All right. Kenny Glick has again every day. God damn, Kenny, it's like this environment was made for people like you. So it takes all of my willpower not to just like hang out with you all day in your room because I have things to do, right? But like I want to do that. You can too, guys. Hitthebid.com. His room is live right now. He's doing it. This is what he does every day. So
we've been up. Yeah, I've been up way too long already. So right now, listen, I just sold the Qs and they're rallying. So typical trade. But this is again that chart pattern that I talk about. This is it. You got the faux show. Kardashian, you got your Kardashian right here, and you got your Andy Dufresne, and it's just these chart patterns replicate. That's why this stuff works, and it's a really great environment. If you're still long the Qs, good for you. They're about to go green, so exciting times ahead.
See you, Kenny.
Later.
All right, from the guy who uses VWAP every single day to the guy that literally wrote the book. Actually, he wrote several books about VWAP. Brian Shannon in the house with us on the morning show. Here we go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Brian.
Good morning. How are you?
Hey,
This is awesome. What a treat we have today, guys. Brian is our special
Look at that tan.
You've been on the slopes. I've been at the beach, brother.
Right.
Have you been getting out there? Been skiing?
I'm going this afternoon after the close.
Brian, are you 100-dayer?
No,
Okay.
I can't. Yeah. Last year was 51. This year's less than that. But I work full time supposedly.
You're really killing it with the mustache. I like this new look. Fuck.
Oh, wait a minute. It's okay. We're good. He's back.
There he is. I like your mustache.
Thank you.
It's good. It works. Works a lot.
What about the shirt? Remember this?
Oh, I remember that.
Buy the dip.
Don't buy the dip.
Talk about that. There's a reason why you're wearing that shirt today. Talk to us about how you navigate in an environment like this. What are the tools that you're using?
Yeah, I mean, it depends on time frame as always, of course, right? So as Kenny was saying, you're going to day trade volume weighted average price. My thought is we're below a declining volume weighted average price. It's guilty till proven innocent for a day trade. For an intermediate term trend, the 5-day moving average. If the 5-day moving average is declining, you've got no business buying for a swing trade. You can day trade long. So if the 5-day moving average is declining, sure, there's great bounces, day trade those, but don't trust them. Then you look at a 20-day moving average, a 50-day moving average, for your so-called position traders. We're below those and they're declining. Investors, a 200-day moving average. We're below declining 200-day moving averages. And if you go back and look at history, it's very seldom, COVID is one exception, but it's very seldom that we just get a V-bottom turnaround and retake that 200-day moving average. The phrase, if they don't scare you out, they'll wear you out.
Yep.
I think we're in for, possibly, I hate to talk on a larger time frame because it's not really my time frame, but it wouldn't be a surprise to me that it's not a good idea to invest in this market for a year or more.
And why do you say that? Why a year? Is that a random number?
No, because that, even if we start turning sideways, we're going to see rallies up. We're going to see 10, 15, 20% rallies. And those rallies, just like we saw a couple of years ago, 2023, that, those rallies all fail because the primary trend is lower. 2022, we saw, 3 major rallies and they all occurred below declining 200-day moving average. And if you bought in there, you ended up, experiencing major drawdowns. And every time we get those rallies, people think they've got the low. Then it just goes and makes another low. Don't trust, for an investor with the 200-day moving average, don't trust it.
So this is a great point. We're primary trend people here at All Star Charts. We're hearing over and over again since last week, this hasn't happened since the pandemic. Worst day since the COVID lows, right? Worst whatever since COVID. The COVID crash and V-shaped bottom that followed it, if you look back throughout history, most bottoms are not that way. Most bottoms are like the one that you just described in 2022, where you take a shot, you fail, you take a shot again, you fail, you get a big base, eventually acts as a spring, and the primary trend turns. Back in 2020, just down and right back up on the first attempt, that's very rare. So I think that's important for investors to kind of keep in the back of their minds right now.
So the way to reconcile that as a trader is you look at it and say, okay, we're below declining 5-day moving average. I'm going to day trade. But if for some reason we get this day trade and it rallies right up through that 5-day moving average, and now you've got an 8% rally on your hands, you say, okay, well, I meant this as a day trade. I've taken, maybe 2/3 of my profits. Let me see what the market tells me on that final third. If we continue to ramp higher, great. So you might have done this, Monday morning. It gapped down, sold off for 10, 15 minutes, got back above the daily VWAP. Buyers regained control for the day. If you wanted to hold, we had that rip, snort, and rally. If you wanted to hold some overnight, then, you listen to the message of the market and readjust based on what the market's telling you, not on what you hope is going to happen, what you think is going to happen, but listen to price action, not to Trump, not to Z, not to Navarro, not to Bressert or whatever her name is saying something this morning. You listen to price action.
It's okay to anticipate certain things, but you have to keep an open mind.
I would say anticipate all potential scenarios. Wait for price confirmation before you participate. Wait for the evidence and set your stops and let the market tell you. Our opinions mean nothing. And that's why I'm always so reluctant to say a longer term time frame, because there's not a single person who's going to get that correct. No one. Except to say, listen, we're in a bear market. Let's, the trend is lower. Why fight the trend for your longer term positions?
So for you, I like how you broke it down. So for you, primarily swing trading, 5-day, there hasn't been much for you to do for a while. Is that fair? Right? 5 days been sloping down. Maybe you get a day or two here.
Absolutely correct. I mean, I've tried to hold some shorts, but I find it too stressful because you can wake up with a 5% gap higher. So unfortunately, this is not my environment. So I've got to adjust. I can't be stubborn and say, just like the investors can't say, hey, I think we're down too much, I'm putting this away for the long term. Okay, but you're going to see a 30% decline. That doesn't do you any good. So I have to adjust and say, okay, we're in a day trading environment. I'll put on my day trading hat and pretend I'm in my 30s again and that I like day trading, which I don't.
And then, so I love how you said the 5 for swing, 20/50 for position trading, primary trend traders, investors, 200, something long-term. Is it just the daily VWAP, intraday VWAP from the first stick? Is that what you'll use for day trading primarily as your 5-day?
To start out in the day, absolutely. And, the other night I was doing that on 15-second charts with the futures Sunday night, just because we were so damn volatile. And I admit,
have you ever drilled down to a smaller time frame? That is not like you, Ryan.
I tried a 10-second one, but I found that to be too noisy.
Oh, God.
But that's how, actually I was having fun. I mean, day trading can be fun a little bit, especially when you're hitting it right.
Sure.
Kenny's
having the time of his life out here. I've never seen him so excited.
Yeah, he's good at what he does. There's no doubt. But Steve, when we have these ranges, when we have a 6%, 7% range during the day, you can't rely on that one daily volume weighted average price. You got to look at it and say, okay, from 9:30, let's just make something up. From 9:30 to 10, we rally 2%. Then we begin to pull back. So for instance, I just posted a chart of the futures, and I've got a chart, an anchor off of yesterday's high that is kind of a provisional anchor, and it's now coming together with the week to date. So it's not really as important, but that in the futures is about 50 50-50, 50-75. In that zone is where we have the anchor from the high and from Monday. So it's multiple time frame VWAPs, the important lows, the important highs, the tariff anchor. So it's all, blends together. And the thing is that, Kenny's been doing this for as long as I have, as far as I know. I remember him at trade shows back in the 90s. Anyways, you look at this and it's a highly volatile environment where you need experience and skill. Most people should not be day trading. If they do, then you need some, help and guidance. And, otherwise it's difficult.
And sometimes the experience and skill, once it comes, it actually comes in the form of doing less, not doing more. You said something interesting. You're the greatest trader I know, the best out there currently doing it. So many of us have learned so much from you. You just said you're not so good on the short side. What do you mean? You're a monster on the long side. You can't just flip your process upside down and trade short. How come?
I've always found short to be more difficult and more stressful. In this environment, we're going to get a rumor the other day sparked a 7% rally. It wasn't even real. So, I mean, you simply can't get up to go to the bathroom if you're short. You can't, and the overnight risk as well. Sure, we gapped down this morning. You had a chance to cover if that's your game, but we get these gaps higher that can be 5-10% in downtrends. In downtrends, you get, it's a well-known fact that some of the strongest rallies, quickest rallies.
But like you said, it could happen in the morning. It happened in 15 minutes the other day.
Yeah.
7%.
Well, that's why you got to be sitting there and watching it, finger, mouse in hand, ready to say, done, I'm out.
How long did it take you to figure this out? For me, it took 3 or 4 cycles where I was just losing money on the short side. Finally, I'm like, okay, I'm not going to do this anymore.
Yeah, it probably took, a couple cycles, I'd say, that I would try short and I would just find it so aggravating to hold overnight. And now it's just kind of, business as usual for me. It's just natural that I don't do it.
How do you, in times like this, just keep your mind healthy? Are you locked in on the news? Are you reading every next headline? Are you like getting the morning paper and reading about the tariffs and the trade war with China? Or are you just kind of like, that's noise and watching price? How are you navigating? How much are you listening to? How much are you trying to ignore? What's going on?
Well, most people won't believe this. I haven't read one single article about.
I believe you. Oh no, get him back, Spencer. What's going on, guys?
Still here.
What's going on with our tech today?
Okay, so I'll pick up where I haven't read one single news story. I haven't had the television on. I don't watch the evening news. I watch the local news for weather, but other than that, I watch zero news. I see headlines and I see stuff on Twitter. I've got that, that Walter Bloomberg guy. He, Monday morning said something like Navarro said that he expects a bottom soon. So I retweeted that and said, don't listen to this nonsense because Peter Navarro is a cheerleader. He has to say this. He's in damage control mode. What does he know about the stock market? And people don't remember this. He used to write for tradingmarkets.com. He, when he was an economics professor at UC Berkeley or wherever the hell he was. And then, then we had a headline today. So I see the headlines and I look at it and I just kind of look at them and go, okay, well, that's a smart person. They're entitled to their opinion. I don't want to know Steve's opinion. You shouldn't want to know my opinion. You should look at it and say, I'm interested in everyone's opinion. Where do I get it all at once? Instantly, that's price. Only price pays. The rest is nonsense.
And right now, this is as bad as it gets, too, because it's one thing to have an opinion. It's another thing when you have public officials out here who are purposefully misleading. So they're coming on and saying, this is my opinion about something. But what people need to understand right now is there's a lot of cyberbullying and negotiating tactics. So they're saying that they believe something that they might not actually believe.
Yeah.
As a bargaining chip.
And that's the thing, and it's chaos, and that's what, so when you look at it and you say, okay, well, this guy's saying this guy's saying that, like, we don't care about Main Street or Wall Street, it's all about Main Street now, and forget about the stock market. And
They care
then
so
you've
much.
got Trump saying we're digging in, and Z saying we're digging in. And what does that tell us? It tells us indecision, and indecision is what the market despises. Someone said, it was actually Herb Greenberg. He said, I retweeted him the other day. He said, markets hate indecision, but what they hate even more than that is chaos. And this is chaos. So just expect volatility. Don't expect one of these headlines is going to turn the market for real, for a trade, for a or for something that's going to offset your gains that you had that morning, short. Then you got up to go to the bathroom and you come back and you're out 5%. I just don't trust any of it. Not even the price action for very long, because it's too damn volatile.
Especially for new traders, it's a time to do less, pay attention, see how the things you're doing are working, but probably want to be smaller in an environment like this, just period, short and long.
100%. Yeah, I've been that way for the last couple of months. Is that I've just not, and people are saying, well, look for relative strength stocks. Last night, for subscribers, I went through probably about 40 stocks that were up the most yesterday, and they were all just garbage, bouncing in downtrends. There's one or two that are near a 52-week high, but yesterday's relative strength is tomorrow's sell candidate in this market. And you've seen stock after stock after stock that had been holding on a relative basis just roll right over. The object isn't to lose less money with these relative strength stocks. The object is stand aside and absolute strength. That's what I'm interested in. I'm not interested in relative strength.
You can get caught up in the relative strength, because in a true bear market, they come for everything. So last week, we're sitting out here like, oh, look at Europe. It looks so good. Financials holding in there. Look at the relative strength from healthcare staples. Then look at the candles from Friday. They came for all of the risk off groups, staples, defensives, low vol, just massive, 5, 6, 7 down moves, percent down moves, completing tops. They came for even the defensive stuff. They came for gold. They finally came for Bitcoin and the cryptos this weekend. So it's one thing to sit there and say, oh, this one's going down less. It's still going down, right?
Bonds were supposed to be that. The whole goal supposedly was that everyone sells their equities, runs into bonds.
Yeah.
We get the interest rates lower. It does the job for the Fed. We've refinanced the U.S. Treasury debt, blah, blah, blah. But, the bonds are getting crushed right now. And the phrase that I've been talking about, I don't know who originated it, but there's so many good phrases that in a crisis, all correlations go to one. They'll get it all eventually.
That also means you're getting pretty damn close, though. Once they take everything.
Close to what, Steve?
Some sort of tradable low, man.
A tradable low, right? But not. I wouldn't call a bottom. Even if we rally 10%, I wouldn't say that's the bottom, because we still are likely to see it roll back over with the pressure that all this uncertainty is not going to get cleared up quickly. We've really, I mean, if you really think about it, we've had a global reset. It's going to take a long time to wade through that.
Well, and nothing's been cleared up yet. The uncertainty that brought on the global reset is still here. They need to figure this out, make some trade deals, and have
even when the trade deals are done. How is that going to impact everything? How is it going to impact this plant here or that company there importing this? Are they already out of business and it's too late?
What's the change to global GDP? What's the reallocation for global GDP? There's
those things, they turn around in the back of my brain, but I'm not an economist, and even the economists get it right. So I really don't, I care, but I don't take my opinions seriously about this stuff. I look at it and say, I'm putting my money in right here. That's the most important price of the day, because that's where I'm involved. That's my anchor point. I measure my success or weakness from that point on this trade, and the rest of it is just academic debate.
Yep. No, I agree. And I think you're spot on. I think you said about like a year for the primary trend. These things take time. That's the end of the bull market. These are tops. They're valid tops, right? So this multi-year uptrend that's been in place, particularly for U.S. stocks, is over, and doesn't just V-bottom like it did during COVID every time. Most times it's more like 2022, bottom in early 2023. So I think patience is really going to pay for primary trend people here. You can argue too that some of the best stocks in the U.S., mega cap tech stuff, the semiconductors, they really kind of peaked out and started rolling over Q3, Q4 of last year. So maybe it's been a little bit more time for some groups, but for the overall indexes, this just happened. We were at all-time highs a month or two ago, early March.
And then people in December, remember when we had drones, we had what were the themes? Quantum computing,
Space and exploration.
all those themes were like doubling and tripling overnight. That's what they call froth. That occurs at the end of a bull market. And the signs were there. And then we started rolling over, and we've, maintained pretty much a declining 5-day moving average outside of maybe 6 or 7 days in the last 2 months. So there's no reason to be bullish when prices are declining.
You didn't have that broad-based froth that we had in 2021, where like the IPO markets, all the ARK funds were going crazy. But like you said, if you looked at those spots based on exploration, we had altcoins that were up 1,000%, like large altcoins like Ripple up 1,000%, into and right after the election. That's where it was. It's all right there. MicroStrategy. Okay. Let's talk about VWAPs real quick. And you can anchor them from wherever. And I want to throw up the August 5th VWAP example for Brian. I mean, this was the level. All going back, 12 months now? If you had that VWAP, I guess not 12 months, 6 months from August 5th in anything, really, S&P 500, I thought was great. But we dug in there and bounced off earlier in the year, just in January. And then when we broke it in March, we ran right back up, tested it, and that's where they slammed it. That was the spot to get short, was it not?
It was, and that was your year-to-date anchor as well, Steve. If you put the year-to-date anchor on that SPY and that Q, they were right in the same exact spot. What?
It was in the same spot.
Same exact spot. And we fought with it for maybe 6 or 8 hours, and then that rolled right over. And there were great short opportunities there. You said I'm the best trader. I'm good at figuring this stuff out, but I didn't make nearly as much as I should in there. And there's much better traders out there, but no one explains this better than I do. I'll take that.
It's so I think you're being modest, but it's so obvious. It's always obvious in hindsight. Like, oh yeah, that was the short, easy short, right?
Well, what I had done, if you go back, actually, I was comparing it to the peak in the Russell 2000 in 2021, and for about a week prior to us hitting that VWAP, I was showing that chart, saying, "Listen, this isn't a blueprint. Don't look at it that way." Because people will say, "Oh, it's going to do this," and that's it's all moving pieces. Everyone expects certainty, and in this case, it kind of was certainty in that area, but it did exactly what it was supposed to do. And we're gonna see rallies just like we saw in the Russell 2000 that take out a prior high in that downtrend. So we'll see a 20% decline. 10% rally, then we'll go down another whatever, make a slightly lower low, then we'll make a higher low, and people say, that's it, we made a higher high. But if we don't have a nice higher low before that, in other words, if we run from the lower low straight to a higher high,
bummer.
And we have that declining 200-day moving average. So I'm getting good at figuring out where we come back to. They expect it will fail. There will be traps, and they will trap some of the best people out there. There's a lot of bad technical analysis out there as well that I'm seeing, and it's really a shame that it's giving technical analysis a bad name. But just like anything, there's just because you went to whatever medical school doesn't mean you're good at sewing people up. People are going to walk out of there and their stitch is going to pop, and they're going to think, well, I'm never going to a surgeon again because surgery is not for me. No, you just have a guy who's a shitty doctor, and there's shitty technical analysts out there who are getting they're getting an audience because they're telling people what they want to hear rather than what's actually showing on the chart. If they look objectively, what you're seeing, what you have to see is what's the definition of a downtrend: lower highs and lower lows. And find a time frame where that doesn't exist. you'll be on 15-second charts, you'll be on 2-minute charts, but otherwise we've got
15-second charts.
we've got lower highs and lower lows, and it's just dumb to fight that.
And just the very first series of them that just began.
Yeah.
First set of them out here.
On the longer term time frames, yeah.
I want to ask this question before I let you go, Brian, from the chat. It's not a question, it's more of a comment from JB. Technical analysis is much less useful in this environment than usual. This is an event-driven sell-off. I agree and I disagree, but I want to hear your guys' take on that.
I'll take that. I mean, it's more valuable than ever. I mean, anyone can make money in a bull market by buying the dip. But when we're in a downtrend, technical analysis is your guidepost and says we're below these moving averages. You're a dope for buying stocks if you think they're going to rally. That's what it's saying. And if you want to get down to the nitty gritty and day trade, you're going to do that without a chart. You're going to do that with fundamentals. The fundamentals of the global economy are broken, and it's going to take them time to heal. It's more important than ever. And that person, no disrespect, simply doesn't understand how to use technical analysis properly.
You could do a lot of harm, do a lot more harm than good if you don't know how to use it.
Well, it's like I said, it was what I was just saying prior to that, is that we've got a lot of bad technical analysis out there. And this person's probably listening to those people who are saying, well, we're at a 38.2% retracement. Buy here. We're at a 50-day moving average, the 200-day moving average. Let's buy here. We obliterated those 200-day moving averages on the downside. They were levels of interest, just like everything in technical analysis. It's a reason to look closer at a shorter term time frame, put the whole piece of the puzzle together, and then take a calculated risk and know where your stop is.
One of our good friends and longtime clients texted me this weekend. He said, "Where are the big support levels?" I said, "It doesn't matter right now. They're all breaking." He said, "What do you mean? You're a technician. Where's the support?" So I know where the support is, but we're blasting right through every one day at a time, right? So it doesn't really matter.
Levels of interest. There are levels of interest. Support's only known after the fact. We've blown through the 50. We've blown through the 200. We've blown through the anchor from this level, from that level, from that level. 455 is the anchor off of the 2021 high and the 2022 low, and a 61.8% retracement of the 2022 high to the low to the all-time high. That's a level of interest.
48 in S&P you're talking about?
What's that?
480.
You're talking about 4,800 in S&P? Where is it?
455, 460 in the SPY.
That's the VWAP from where? Sorry.
From the low of 2022, the high of 2021, and it's a 61.8% retracement of the 2022 low to the 2023 high.
Yep. I like that whole situation there around the prior cycle highs, that whole area. You can almost just draw a straight line at the prior cycle highs.
Yeah, and we'll see. I mean, I wouldn't stick a bid in there. To me, that's stupid. I'll look there and see if there's evidence, and if I can survive a day trade, then I'll hold a little bit overnight. And then if it starts to rally and we get a 5-day moving average flattened out, then I might even add to it for a swing trade. But then as it comes up to a declining 20-day moving average, or the anchor from the prior, from the high, made 3 weeks prior to that, I'll sell a little bit. If it rolls over, I'm out completely. And I might even start to get short because the primary trend is still lower.
Funny comment here from Blake in the chat.
Yeah, my conspiracy theory, Brian, is you throw a bid or offer out there, whether you want it or not, you're getting done. Whether you want to get filled or not, they're gonna find you, they're gonna get you, right? That's just what I think. So, all right.
This is when they say on the news, oh, we're having a technical bounce because there's no good news right now to explain why we're bouncing. Right. So they just call it a technical bounce. Just means they can't wrap a headline around it.
Sure,
that's right. That's exactly right. Brian Shannon, guys, check out his Twitter, his site. I also believe did I put the link? Oh no, I didn't. I'm gonna add the link to his book in the chat right now. That was out. It was out last year, right, Brian?
January 23.
20. Oh, it's already been over. All right. Anyway,
It was a 24. I don't remember.
I don't remember. All right. There's the Amazon link to his book, his latest book on VWAP. Check it out. Brian Shannon, thank you for coming on as always, man. We appreciate it.
Always a
pleasure.
pleasure. Thanks man.
Guys. Have a good day.
All right. We're not having Mary on today. Mary is also with her family, also in Florida. It's spring break week. Here.
I was just over there. They're in Isla Mirada, not far from me.
Not far from you.
Yeah. I was just with them. All right.
So we're gonna wrap it up. As a reminder, Strazza going live in about like 12 minutes right here on the channel. So we're gonna end this show now. We'll be back live at 9:45 Eastern. Different stream. Actually, before I end this stream, I want to set it so it'll redirect you automatically if you're watching us on YouTube. But if you're watching us on Twitter, there or whatever X, there will be tweets about it. If you're watching on our site, it'll be on the front page. And if you're watching us on YouTube and you give your page a refresh there, then you will be redirected to the next stream automatically when this stream ends, which is right now. So thank you for watching. Drop us a like. We appreciate it. Thank you, Brian. Thank you, Kenny. Thank you, chat. We'll see you in like 10 minutes. All right.
You got to get a driver next, P-Brog. Yeah, I got just enough time to inhale a croissant and make some trades. We'll see you in 10.
All right.
Rock and roll.
I can't take no loss. I don't even know what it costs.